Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, October the 3rd. The year's 2022. Let's talk trading. Making adjustments with Walmal. These videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. So Walmal, actually, in last night's video, I talked about basically sticking with your trading plan, even though the market has been maybe a little more volatile in terms of range. So what's your opinion on that?
I think that you got to look at the market or look at our trading from economists do this all the time, but we got to do the same thing. You got to look at it from a macro point of view, and you got to look at it from a micro point of view. What I mean by that is that your trading plan is your trading plan is your trading plan. And that's the macro part of it, that's the big thing, that's the big umbrella that houses all your rules, it houses how much you're allowed to trade or how much you are willing to go and lose in a particular day, how much you're trying to achieve as a goal, what methods you're using, all those big, things that sit out there that you use for your trading. But then you got your micro things, and I think that's the thing that may change slightly because of market. One of the things that let's talk a little bit about some of the things that have changed over the last several weeks now within the pound dollar. You go back 4 weeks ago, you were seeing that daily ranges were in a range of on a slow day, 60 pips, and on a big day, you were seeing 110, 120, 140 sometimes, and that was really it. Now, you go back and look, and, the slowest day I see in my chart is 186 pips, and I'm going back 10 days, and you're seeing typically 300 pip days, today, think about it, we're already at 196 pips. Now you can say, well, that's a great thing. That means there's lots of travel. Yep, there's lots of travel. You make lots of money off of that. But does that affect your trading plan? Well, like I said, it shouldn't affect your macro. But what it could affect is the micro parts of the trading plan. And what do I mean by micro parts of it? Well, for instance, one of the things that I see right now, my spread is, it's back to pretty normal. But all of last week, I was seeing spreads of 3-4 times the size of what my spread normally was. So that affects sometimes whether or not I would take a trade or not, just because of the spread. If I'm only looking to go and make, 2 pips or 3 pips or 5 pips on a trade, and I got a spread sitting out there of 3 pips, that means I got to go, if I want to go and make 3 pips, I got to go and have that travel 6 pips. And I got to go and look at the charts and say, does it make sense that it's going to move 6 pips here? And how do you make those determinations? Well, you got to make micro adjustments. It's something where if I'm looking at a chart, typically in the past, going back several months ago, what would happen is if I saw, let's say I was trading flip-flops, and I know we talked about flip-flops a little bit, but if you're trading flip-flop boxes, and my spreads are sitting down there, typically on the broker I'm at, my spread is somewhere around 0.2, 0.3, because I'm on an ECN, and then I pay commission on top of that. So, by the time you're all said and done, you're paying basically a pip. If I'm sitting there on a flip-flop box and I'm looking for it to break the flip-flop box, does it make sense to do it? Does it make, on 1 pip, it's going to, if it's going to break it, it's going to break it by the 1 pip. So you can get covered that way. But if I'm sitting there where I'm going to go and make 6 pips on the break of a box, I better be real careful about that, because otherwise, immediately as soon as I get into the trade, I'm down, 4 or 5 pips minimum, without even batting an eye. I haven't even done anything yet. And it's sort of like you get that, I know you talk about TRO all the time. You go into a trade and you feel like, why does the market always go against me? Well, part of it's going against you because you got to pay for that, pay for that commission, pay for that spread. And then on top of that, you're going to get, if I'm taking a line in the sand and I'm looking for the cross of the line in the sand, if it just hiccups, a little bit, now I'm down, sometimes more than I'm willing to go lose on a trade. So I got to go make adjustments. So what are some of those adjustments I can make? Well, the first adjustment I got to make is maybe I don't trade as heavy. If I'm getting, 3-4 times as much, travel, that shouldn't be a problem, because I just reduce my lot size. And so instead of trying to, let's say, I'm making numbers up here. Let's say you're trying to make $50 or $100 on a trade. Well, maybe now you're looking at getting $50 on a trade because you've reduced your lot size. But at the same time, what you've also done is you reduced your risk. That's a micro adjustment you can make. Another thing you can do is you can sit there and say, when this does take off, it does take off for a long way. So for me, you guys know that when I get into a trade, I usually have a particular dollar amount that I want to go and make, and then I just pop out. Well, if I'm seeing that the market is doing this stuff where it likes to go, and once it starts to run, and it likes to run for a long distance, well, yeah, I may be trading at, a half load, but I can now sit there and let it run. Instead of going 2-3 pips, I can let it go and run 5, 6, 7 pips. If you remember back, if you go back and look at the videos that we did back in July and August, I was saying that I wasn't willing to let it run more than 1 or 2 pips. Why? Because the way the market was reacting at that time. I mean, it would go move 2-3 pips, maybe 4 pips, and immediately dump the other direction. Well, it's not doing that very much anymore. So when it likes to run, it likes to run. So those are just little micro adjustments that I like to go and take and make.
One of the things that you have to be wary of, though, with the range, is you see the big range and you see, I can make a lot of money, but the flip side is, if it goes against you, especially on some of these moves, in 2 or 3 ticks, it's moving 5 to 10 pips. That can happen too. So hopefully you have your spread, or you have your stop loss in place so you don't get cut.
Yeah, exactly right. And make sure you have that. And the other thing that helps is that, if you've gone and lessened your load, like I said earlier, that helps a little bit too, because that means that, before when it would jump 2 pips, now if it jumps 5 pips, and let's say you cut your load in half, well, you're feeling the same pain. Dollar-wise, anyway, you're feeling the same pain. And that's why I make that, what I would make that type of an adjustment. But we're all different, and we all got to go and figure out what those things are, based on our trading plan. If you're a swing trader, you could have made a lot of money over the last, couple of weeks because of the fact that we've had, 200, 300, 400 pip runs, sometimes as much as 500 or 600 pip runs, and if you were able to go and pick those tops and bottoms correctly, excuse me, you could have done very well for yourself. And so what I'm talking about, half loads and things like that may not make as much sense, because you're not really in the game for where a spread really matters that much, because you're not looking to make 2 or 3 pips. You're looking to make, minimum of 20, 30, 40 pips. So, you got to figure out what the things are that this market, we're in a new market now, and we have to go in and realize that and say, hey, we're in a new market. Do we need to go and make some adjustments?
Yeah, and one other thing, I just flashed through the chart so the trader could see them. The traders out there can see what the different setups look like. One of the things with these huge ranges is maybe you like to trade and get your signals from, say, the 5-minute chart. Price is the same on all charts, but depending on your method, sometimes the chart, which time frame you use, is going to change where your entries and stops are. And you might want to start looking, say, at 1 hour, 4 hour, even daily signals along with your 5 minute signals, because if you get a daily signal, say like on a rat trade, you know, if you bought in the rat zone for the year, you'd be sitting pretty right now by about 500 or more. No, more like 800, 900 pips if you was stayed in that trade.
Yeah, and that's, that's always, hard to go and do that, of course, unless that's your methodology. For me, that I'm telling you, we talked about, you got to be you, right? I think it was what we talked about on Thursday of last week.
The best yeah.
Yeah. Now, I could never do that. I just know myself. I know my personality. That would just kill me to do it. But at the same time, I know other people that's they prefer to do that. Just look at the chart, figure it out, put it in, put the trades in, as you like to say, put your bets in, and come back tomorrow and see where they landed.
Yeah.
But that's not me. I'm more, maybe I'm a micromanager. I don't know.
No, it's just, I really see that as placing your bet, because when you place a bet, that's it. You can't do anything. You can't take your money off the table until that game or that is over. So when you walk in a casino and, put your money on the roulette wheel, on the crap line or whatever, that you placed your bet, and then you have to let it play out. So the same things with trading. You pick your take profit point, you pick your stop loss, and then you just leave it alone. And whether it takes, minutes, hours, days, or weeks to hit it, you placed your bet. And and the thing is, that's part of discipline. We talk about patience, and you like to talk about discipline, but once you place your bet, do you have the discipline to leave it alone? That's the hard, that's another one to think about.
Yeah. Exactly right. I mean, and the thing is, you can see these things on the chart, and I can see them just as well. I mean, I told you that, going back several weeks ago, that this, the pound dollar was going down to 1.1 if it doesn't go down to parity, and we were at that time, I think we were about 1.3, I think, or something like that, or 1.2, I think we were at.
You mean 1.12?
Yeah, sorry. And, and actually, no, we were at 1.18 at the time. That's where we were at, thinking back over it. But, and it's like, it was so obvious to me looking at it, but at the same time, it's like, I can't do that. I just can't do it, In fact, I think I even put a bet out there to go and do it. And like 2 days later, I saw I had money in the account off of it, and I punched out, and it's like, oh gosh, I just had waited for it to get down to the 1.1 like I said it was going to get to. But that's me, and that's the thing about you, and you got to figure out who you is. And I'm tying this back to making adjustments. The reality is each and every one of us has got to go and make the adjustments that fits into that grand scheme of what your trading plan is, because you can't violate that, and you can't violate who you are. You can't violate that either, because the thing is, if you violate the trading plan, well, you're trading a new trading plan. You stop, figure out, is this really what you want to do? Are you abandoning your trading plan and going to a new trading plan? You have to go and make that assessment.
Right.
And maybe there's a reason to do it, and maybe there's not, but you need to make that assessment.
Yeah, I agree. So,
and then the second part.
Go ahead.
I was just going to quickly, the second part of it is you just got to go and see if it's going to violate who you are as a trader. Because if it goes and violates who you are as a trader, you're going to go and start making mistakes, because you're going to be trading against the market, and you're going to be trading against yourself.
Yeah, and one One more thing I'll add is when you're making adjustments, make tiny adjustments, not huge adjustments, because if you're making huge adjustments, you're really altering your trading plan. And just always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is a rumpled one, over and out.